The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon, Eastern Time at 877-927-6648. And thank you to John and Steve for three great hours. And this continues right through the day until 6 o'clock. You've got your options hour coming up. You've got Daryl Martin. You've got Dave White, you got Tom O'Brien, 2 hours, 3 o'clock till 5, and then you've got Andy Hecht, programming all the way through. Dow's down 51 after kind of a doji candle yesterday, and this is going to be very interesting. A lot of people were thinking that this was the start of a big move to the upside, and I have to tell you, I went through the analysis over and over and over. I even did very little in terms of us buying or selling, although we had specific areas to do some reshorting and some specific stocks that we or stock in this particular instance early morning that we were thinking that it might be a good buy. But at this particular point, you know what? Cash is king, or being short, or very selectively long. And the longs, it's getting less and less likely that the longs are going to work for very much longer at this particular point. Very critical day. Why? Well, let me show you what I was looking at. In the, actually, no, let me do the numbers first. Dow's down 48 at 16,521. S&P's down 7 at 1930. The comp index is down 21 at 43.79. Gold is up 6, or is it 8? $6 at 13.16. Silver's up a little bit. No, silver's down 8 cents at 20.01. Platinum is up a tad, but it's high-grade copper still stuck in the 3.1 area, down 2. I think that copper's going to be going down lower, but we'll have to watch this real closely. But even more important than that, you've got crude oil, which is now at 97.28. It is not doing all that well when you consider that there's conflagrations out in the Middle East, and copper usually, crude oil usually kind of gets panicky and starts to move sharply higher. So this is telling us some kind of a story here. And bonds are down 4/32 at 139.09. Dollar, now this is going to be really interesting. Look, the dollar I had is the peak G. As it might not actually need to get all the way to a leg D. And right here we've got the dollar stalling underneath the index, under 81.72. Made a high today of 81.68. It's only 5 cents from making a leg D. But it's going to be really interesting to see if the dollar does decline. And I'm beginning to look at gold a little differently now. Gold is held very well. And while gold is only up 6.50, it's more important that it held that 9-period exponential moving average in the 120-minute chart, that the gold contract has gone to ABC. This is a leg C, a gray C in the 120-minute chart, because it fell from the high of the 8th at 1324.30. This is the December gold, and it pulled all the way back to 1307, was it? No, it went down to 1305.70. So this is going to be really interesting here, because I'm looking at this and I'm saying there is a chance that we suddenly get a little bad news out in the international front that starts to make gold look attractive. And I must emphasize, in the shorter term, but I'm going to go one step at a time. And the reason I say that, because if you look at the gold continuous contract, that monthly chart is there's just nothing positive in it on the price. This is very interesting, because sometimes I'll say the price is held very well, but the technicals have failed miserably. Now look at this. You've got for the very first time, the MACD is about to turn up. The stochastic has been running very strongly. I'm looking at this and I'm saying, it's very hard to hold the gold or any of the gold stocks when they're chopping around in a sideways move. but a move to the upside could be sudden. So I'm going to be watching this real closely, because if the dollar does decline sharply, it'll say, okay, now it's gold's turn to rally in that counterpoint move that they often have. So now I want you to do the one thing that is absolutely imperative. I wanted to show you the chart that I was looking at. Oops, that's the 120-minute chart of the diamonds. This is the quintuple sectors that I look at. This is the Dow 120-minute chart, peak A. This is the VIX index, which is running to a leg B as we speak in the 120-minute chart. Nice move there. Let me see. And we actually are still looking at the, I'm about to sneeze, I believe. Hold it. Here we go. Lift the headphones. Excuse me. That was, in fact, a sneeze. And I'm looking at this and I'm saying, hey, wait a minute. If, in fact, you've started a little rally in the VIX index, and one of the reasons we've kept our position in the short VIX as opposed to taking real nice profits in the VIX itself index on the long side, one of the reasons, thank you, KJS and the debt, one of the reasons why I've held it, the inverted VIX index, is not only do you get the benefit of the lack of follow-through to the upside, so it keeps on shrinking, so it doesn't quite participate in the same way as it did before when it was in a bull mode, now that it's in a bear mode. But, in fact, it's a little easier to keep because we got in at such a very nice point near the highs, near the all-time highs, that it's just at least a little cushion. That's the most important thing there. So I do want to hold that and sacrifice. If we do sacrifice, we'll sacrifice some points. But so far, it's acting exactly what we want to see. Now, what I wanted to show you here is this chart. Remember I spoke about the May 20th low, May 21st. This is the third bar after the low that was established. That was at 16,333. That was back on, I don't even remember, today's Tuesday, Monday, Friday, Thursday. Back on Thursday at 16,333. Now remember, I had my double. I hardly ever get this. My double Chapman wave trend gauge flashing is one of the reasons why I think you saw that relief rally explode to the upside on, what's that, Friday? Yep, Friday. Now look what's happened. You see the low, you see that sharp move down from 16,735 to 16,341. I say sharp move down just because it was very quick. And it went down to the 16,341 level on May the 20th, and then it rallied. But the difference was that the MACD is really negative now, or at least it was up until now, but what I was looking at was when it was still expanding. Now it's starting to narrow a little bit between, as you see the histograms start to rally. And the stochastic has been flat. This is a terrible thing. A flat stochastic means there's no upside energy, sustainable energy. All right? Whereas here you got your V-shaped turnaround. Remember the rules in the Chapman wave methodology is that you get a buy signal, but that buy signal comes when the stochastic crosses positive and the price moves higher and starts at least a leg A. Sometimes I even want to see a B, but in a strong leg A above the 90 MA, that's good. But that's only one part. Then you want to see the stochastic go above 20%. Well, it did that. That's another part. Then you want the fourth thing, and that's the MACD has to confirm as it crosses positive, and then you can go from buy signal to a possible buy mode almost immediately. That happens. In this particular instance, I've only got a buy signal, but I have no follow-up whatsoever, and I needed to see, is this third bar after that doji candle that occurred on the 22nd of May, the 23rd of May, that was a beautiful follow-through with the 9-period moving average support with a doji close well above the previous high bar of that doji of 16,565.39. And that was the next day. You went all the way to 16,613. And what I've been saying here is I want to see not just 16,600. I want to see 16,720, 730, 740. That area become tremendous activity, a range of activity, so that the base of 16,650, 16,620, that becomes a real strong trampoline support. today's candle confirmed what we were looking at, that there was a good change. I even drew this in. Look, I drew in the arch formation within this range. And the other thing is that bar was really important because you saw a big beta, a big difference between the differential, 9-period moving average differential, and the slow stochastic, that red line and the green line, when it took off on the 23rd of May. So this is very different. We've not seen anything even close to that. So I'm still considering this as just a retracement bounce, and it's only a bounce, and that it should fail fairly soon. Now, as we're about to go to a break, let me show you something else. VIX.X and this volatility index. Look at this chart. If you're looking at Tiger TV, the chart on the left is the daily. The chart in the middle is the weekly. The chart on the right is the monthly. And when I bring this one up here, it is the 120-minute chart. Look how sharply the VIX has failed, and yet the price today has not spiraled higher. So the VIX is only now up 15 cents. It was lower earlier on. Using this pink line, this kind of pale color, pinky color, as a line of support, and it's tried to bounce off it, and so far it has succeeded. Now, the very interesting thing about this particular chart is in the patterns that I follow, you've gone to that peak D. Remember, that's the reason why I started to cover on the VIX index and expected a very strong bounce on Friday. So, as I'm looking at this now, this is a correction that's continuing to unfold, and this is just a bounce within the correction. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's down 37, S&P's down 6. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, minus 35 in the Dow, down 6 in the S&P. This is such a fascinating market, and it's a challenging market in the sense that there are stocks that are behaving pretty well, fewer and fewer. And you would like to, personally, I like to have a mixed portfolio where there are longs and there are shorts. It just makes it much clearer for you. But at a certain point, when a bear phase begins, being long is kind of tough because, as Granville used to say, in a real bear market, 90 to 95% of stocks go down. And but we don't know yet because I'm still waiting. Look here, if we're looking at the weekly chart, I've got a sell signal to sell mode already for some time in the Dow. And if you're looking at the weekly chart of the Dow, it's definitely a sell signal to sell mode. So it's in a sell mode in the weekly chart. And the pattern that I've been talking about for so long that tells me whether or not there's a hat-trick top with a daily starting off a sell signal to sell mode. Then you get a weekly start going from sell mode, sell signal to sell mode. Sell mode implies that it's a much deeper and longer correction taking place. And the other thing is when you finally start talking about a peak E, or even an F in some cases in monthly charts. And if you look at the Dow, this is an E, but there hasn't been a break under 16,355. That's the 9-period exponential moving average, and the month is not even halfway through. But look at the IWM. I have no way of counting this other than to say there's just so much evidence that says this is probably a leg going to a peak F. 6th highest peak in the Chapman wave in the monthly chart with a double top forming in the weekly at a peak E at 120.97. This is a Russell 2000, and this is just a bounce. It's actually a pathetic bounce so far in the daily chart. The MACD and the stochastic have improved a lot. So if the IWM, for whatever reason, today being Tuesday, if out of the blue, by Thursday afternoon, Friday, you see a close above that candle right there, 114.31, 114.22, yep, above 114.31, trying to challenge the 115.65 high of the week of the 24th of July. That's another thing altogether. It says, hey, the bounce could be quite good, and then maybe you get a high level and a recycle of some sort in the monthly chart. But look, even the New York Stock Exchange, NYA.X, and I'm going to go through some charts in a moment. That is a peak D. I haven't put the down arrow. I have no choice but to put the down arrow because last week was a close way below, second time below the 9-period moving average. MACD was bad, stochastic was bad. So that's a down arrow in a weekly chart, a D. That's just usually there's time and price involved, but it's an E in the monthly chart. And if the New York Stock Exchange trading at 10,694 down 28 closes under 10,500, that'll be the first time it's done that, close under the 9-period moving average, since it broke out above it in July of 2012. Man, that's 2 years without closing under the 9-period exponential moving average. That is an amazing feat, especially for a very broad index like the New York Stock Exchange. Now, I'm going to do something else. I wanted to show this. When we're looking at the bonds, I'm just going to go to the continuous contract for a moment. This is a leg E and possibly a peak E if there's no new high above 140 and 11.30 seconds. This is the continuous contract. To get you a better perspective, I'm just going to tell you what the price would be in the September contract. And that will be 140 and 11.30 seconds. 140 and 11.30 seconds. Wait a minute. 130 and 37.30 seconds. Yeah, they're really close, within a point. So that's one thing. The other is, in the monthly chart, the bonds, this is the 30-year Treasury bond continuous contract, is about to take out a trend line resistance, and the stochastic is rallying, is at 71%, and the MACD is just crossed very nicely for the second month. And of course, we're only not even halfway into the month, but it is a good sign that it's crossed positive and has been a responsive move in the price itself. So bonds are actually acting very well. So when you put this together with the volatility index, just beginning a move to the upside, bonds acting very well, the dollar, if it continues to rally, and take just a limited time here for maybe a peak B and then go C and D in the monthly charts, that there again you're looking at potential for weakness in the general stock market. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 35, S&P's down 5.5. Be right back at 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We've got a very interesting market here. I suspect that we're going to get some kind of a narrow range, at least at this point, as the market's attempting to complete this upside move. I'm not sure that the H to the downside is about to start, and we just go sailing down. But by this afternoon or tomorrow morning, let's put it this way. There are still enough stocks, and there are enough technicals saying that there's internal strength from the pullback that we have just had. That's quite sharp, really, when you think about it. After all, the Dow Diamonds have gone from 172.32 down to 163.13, almost 9 points. Yeah, that's one of the bigger moves it's had in quite a while. So this bounce should be expected. Now, this is an interesting thing. Comment Gringo and Den says the Tesla Model S may seem pricey at $63,000, but it's a bargain compared to prices in these 16 other countries. What I wanted to mention about the Tesla is, when you remember I spoke about this, I said Consumer Report rated it number 1, and I thought to myself, why did they do? I don't know why they went out on a limb when there were so many things that they were talking about that were not positive. In fact, there were a couple of negative things. Now they're coming out saying, yeah, there are quite a number of problems in the Tesla, more than in other cars. To me, it was. I think they got carried away by the belief that it was an electric car and a bunch of other things that when I read the report. But if you looked at the facts said that while most drivers tend to love the car, there were a number of aspects to it. For instance, that really big screen. I don't know why they didn't blast it and say that is a total distraction in the front of the car to have a screen that big for the driver. When I sat in, I've sat a few times in a Tesla. That screen that's a monster screen. It's fantastic. But I'm talking about safety factors. If you make a big deal about safety, then looking down at a screen is not a cool thing to do. You can glance at it, but to actually read it, that's number one. Number two is the duration of a ride at 200 miles, 180, depends on the weather. It could be very cold, or you could be using a lot of air conditioning, whatever it is. It is still nothing. It means you have to recharge. It's a big deal. It's more in the category of discretionary. income that goes towards this kind of car, because as a purely functional thing, what if you have to go further than, say, New York? What, are you going to stop everywhere it is and charge? I fill up, and how long does it take you to fill up? Maybe 10 minutes. It's actually much less than that. But let's say 10. That's not 30, 40, 45, or 50, whatever minutes it is. So there are a number of factors that I was very disappointed when I saw the Consumer Report give it such a great write-up. They should have given it a great write-up, but they should have been really critical of critique. I don't say critical negative, but critique in a very pragmatic way other features that are involved. So it's not a big surprise to me. Now let's look at the Tesla chart, because remember I had it in leg C. It's making a peak C. That allows the MACD still at 85%. The MACD still very strong. The stochastic still at 85%. We've only got, let me move this across, TSLA. We've got A, B, C, D, E. E corresponding, E in the on-balance volume, peak E, corresponding to peak C, possibly today in the daily. I think there's one more pop-up above the round number we've already done that. We had a round number 255 low yesterday and a high of 263.74. But the all-time high of 265, that's going to be key. And that should be the double top where it goes fractionally above and then pulls back. So let's see. 12 to 14 batteries while you're on the highway. So, Basil, when you look at TKMR, I was asked about DDD. So first I go to DDD. You know, I'm bearish on the 3D systems core. Everything I read about the stuff, it's just what an incredibly exciting field. But as a company, it looks like it's still got problems, and it needs to test at 48.86 down 28 cents. I think it has to go underneath the previous low of 43.35, and then we'll see what strength is inside, because then it should bounce back, and that bounce is going to be really important. 3D systems, and the other one is SSYS. A better looking chart, but not a great looking chart, but it is better looking. And when you look at the other question here is, would I look at TKMR? TKMR. What is it? TKMR is, Tickmira Pharmaceuticals Core. I think I saw that go flashing by on the ticker, CNBC ticker. Yes. I don't know if you're all along this. So this is in the week, in the monthly, it's peak A, B, C, D, E. Peak E, and it pulls back, but it hasn't given a down arrow yet. It should have given a down arrow, but it hasn't, because the MACD is still quite good. Stochastic's terrible. I would say it's news related. And this particular spike, a leg up in the weekly chart, is going to come under duress if it closes. It's at 19.13. TKMR down 4.67, down 20% at 19.13. But it's had a spectacular move. It's an island reversal at this particular point. My thinking here is that there is news involved. It is probably a biotech company. And as such, you've got to be prepared. It's going to have really wild, whippy action, Ebola news bounce. Yeah, you know, the news on these things can be very transitory. And I'm always afraid to buy it on the news. There was another stock I'm trying to think of. Oh, that's right. Sarepta. And Sarepta had a big spike on news. And yet I just didn't want to take a chance with Sarepta. Not at this stage. I didn't see it technically in a position. So this is the same category. Here's my recommendation. If you're long, I'd looked at $16.93, the 9-period exponential moving average, to $15.48 as another moving average. If it breaks and closes under that, look out. 13.5, 12.5 could be in the cards very quickly. If it holds and you want to go long, it's a very risky stock because it's in the biotech. But technically, the weekly chart is improved. The monthly chart is kind of okay. a very whoopee, huge range between the 9s and the 31 area. I mean, that's big. So all I would say is that if it holds between 1720 and 1680 and then starts to make a little bit of a U-turn to the upside, you can take a small position as a trading position. I would not have more than an 80-cent stop, even though it could be intraday. It's wild. I'd still have it as an 80-cent stop. And what I would do is, if it starts to rally and it gets into this 22.23 low of yesterday's candle, the body of that candle, that doji candle with a high open of 23.64 and a close of 23.80, that would be my target. If it goes above that, very positive. If it gets repelled, just get out of town. I wouldn't hang around too long. So I hope that helps you. Now, a couple of things that I wanted to talk about. I think I covered the questions in the den. Let me just have a quick look there. Yeah, so TKMR, and I'll try to say the name again. That is Techmira Pharmaceuticals Core, trading at 19.23, down 4.57. It's in the wild phase now. It's in the rumor and the news phase. But if there is something of substance, you will see it hold the 16, probably the 1650 area on any sharper pullback. And if it doesn't do that, be careful. But if it does do that, you can expect a leg D above 26.05. That's why I say I would treat it as a small position trade only. You could even add to it if it closes above 22, the high of today. If it closes above that, no. If it ticks 1 penny above it, you could add another small position if you want to do. If it consolidates over the next 1.5 sessions, doesn't break down, then that's the level that I would, if you had started a small position, I'd add another trading position, 1 penny above the 22 high of today. And the moment it does that, that particular position gets a stop of like 20 cents, 1%. Why? Because this is the move that should take it immediately to the doji candle close of yesterday, and that would be at 23.80. Hope that helps you. So here we go. Mankind, I follow this one real closely, but I only follow when it goes on, when I see it on the ticker. For some reason, every day, I keep forgetting about it. Oh, look at that. This is just horrible. Hits 10.08 yesterday. Now it was this morning trading at 722. 30% decline in the blink of an eye in 2 days. Hey, you got to be careful of these things. Peak D in the monthly chart, just be careful. Yes. It's a UPS and FedEx still ship some of their business through the post office. Oh, big thing about the post office. God, this post office, can you believe it? And yet, the way you say, you should have a post office. You know, people out in the boondocks, why shouldn't they be able to get their mail? Anyway, we're going to go to Brent in California. Hi, Brent. How are you?
Good morning, Basil. How are you?
I'm well, thank you.
Happy to hear that.
You'd like to, thank you.
I was calling about, I'm actually selectively long, just very few stocks, but I was fortunate enough to have bought Maxwell Technologies yesterday right about $9.
You're getting good at buying these dips. I like that because it gives you a nice margin of error safety factor here. So let me just tell folks that Maxwell Technologies, I think it's Technologies, yes, trading at 9.61 up 42 cents. This is a big move, just as we saw the previous stock pull back 4-5%. This one is up 4.5% at 9.61, and it's Maxwell Technologies. The daily chart is in leg B, just above the 9-period moving average in a doji pattern, right 2.25 hours into the session, and the weekly chart has made a trough B. No, is making a trough B if it doesn't take out the low of 8.30 made last week, and the monthly chart is just horrible. I'd like to say it's constructive, but all I can say, it's in a trading band and just whips from the top to the bottom to the top to the bottom. So I don't want to even discuss that now, because 1168 is the first comfort zone of the 9-period exponential moving average, and it's 2 points over 2 points away right now. So, okay, so what I'm looking at here is that in the 120-minute chart, it's gone peak A, B, C. This is peak D. If this peak D sees it hold above the low of 9.36 in this candle that is being made right now, that was made the previous 120-minute candle, if it holds above that and it starts to take out the high, that is really good action. But at peak D, and let me just put this in for those of you who are new to my work, it means from the most identifiable lowest low bar, you count them, you merely count each successively higher peak, and you expect it must be higher, otherwise it doesn't become a peak. C, and we're in leg D right now. But the MACD is still climbing, and the stochastics at 79%, holding quite well. Oh, I think you got yourself a really nice entry for a stock that certainly could have a bounce, but the most important thing is it's going towards the gap of the 31st of July, where the low was 10.79, and then 10.10 was the high of the first as a gap down. So you want to see it go to 10.12 to 10.18 in the next few days. Maybe makes peak B by having a slightly down day tomorrow, but by Thursday or Friday at the latest, I would like to see this in the I'd say 10.18 to 10.22 area. Why? Because the MACD and stochastic have turned up, but they could very easily deflect lower, because the price action has been a little bit stronger than the technicals have been portending. But if you look very closely, you'll see that there's been a positive divergence since about the 28th, 29th of August, where the stochastic has been making higher highs and much higher lows based on this particular pattern we're looking at right now. And the MACD has turned very sharply above, and it hasn't yet crossed positive, but it looks like it really wants to. I think you got a good eye here. I think that you've done something very good in terms of a bounce. Now, what would I look at? I'd be looking at it potentially to fail under 10.79. Great profit for you, but I think that would be the strong resistance area. But if for any reason you haven't spoken to me before then, and by the time it gets to Friday afternoon or Monday, this coming Monday, if the market has pulled back and Maxwell Technologies has held very well, it should start to fill the gap, and then it's going to have a tough time between 1079 and 1155, which is the candle of the 28th of July, because above that it gets into that very ugly candle of the 25th. But going towards it, and there's a 9-period, there's a 50-period, I believe that is. Let me just double check. No, 200-period simple moving average is at 11.61. Oh, I think you got yourself something nice, but watch out for a pullback below 925. Hope that helps you.
All right, thank you, Basil.
Thank you, Brent. Brent Martinez will be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, everyone, we're back. I'll tell you what I want to look at. IBD 50. Beta. B-I-T-A. Beta. Beta is B-I-T-A. T-A. Right there. Trading in leg F, that's the way I've got it right now in my notation in the Chapman Wave. Could have recycled. This could be an F/B, but so far I'm going to call it an F. Leg D, huge move to the upside. This is an advertising company, Batauto Holdings Limited. In leg G/C in the monthly chart, nothing wrong with the monthly chart yet. Nothing wrong in the weekly chart. And the daily chart looks absolutely great. I probably should say F/B. So that's a very good one. Woohoo. THRM. THRM is Gentherm Inc. Climate controls for autos and trucks. Leg D in the monthly. Peak E already in the day and weekly with the negative technicals, but the price is held beautifully. And leg B bounce in the daily after making a peak F all-time high at, let me just tell you the price right now, at 48 round number low it made that day, and 49.23 was the all-time high. So 48 is the number to watch. Any close above 48 says, whoops, be careful, there could be much more strength. and not being able to close above 48 is very negative, especially if it goes back down and goes below 45, which is a 9-period exponential moving average. So that one's looking pretty toppy. When you look at the next one, which is Facebook, Facebook's struggling here. Facebook is at 72.58, and we actually long Facebook, but I've tightened the stop. I was expecting that there could be an H pattern, but most important, low case H, the most important is I was hoping it would break above 74 round number, the high of the 7th of August over the past few days, to show that it's trying to get back to the 76s with 76.74, the peak D or leg D, all-time high in the monthly. And that peak C, it could be an alternative count. Oh, boy, I don't see how. It could be A, B, even then it's a C. I've just had no choice but to call it C, and we'll see if it's going to C, if C can make a D. So that's Facebook trading at 72.56. So far, it's not great action. It isn't yet negative, but below 71, just 2 points lower, and it's got a real problem. So that's Facebook. We've got SLXP, and that is, in fact, Salix Pharmaceuticals. Now here's another one, AB. Even if I do an alternate count, it's exactly the same as Facebook. I get it as a peak C. It says it should eventually get to a higher high. SLXP trading at 127.93, down 80 cents. And the daily chart, I haven't finished notating this, had made a 141.80 peak D high. It's going to a rectangle formation, and now it's failing, and it's under the rectangle support. It's trying to fill the gap. Good chance it's going to hit 123.95. It's at 127.80, which is the gap low. And I don't know if it has to be in this move. Oh, look at that. It went to 123.32 on that spike down 3 days ago. So not very good action. So when I look at the Investors Business Daily Top 20, I didn't look at all 50, not this time, but maybe this coming weekend I'll get a chance. This is telling us something very interesting. Look at CAR. This is Avis Budget Group. This is fantastic action. Almost went long this morning. And I thought, gee, it's kind of a crazy market to get Avis Budget Group to go long. I mean, that's telling us about economic strength. And this is a brand new move to the upside. I have no choice but to count this as A. And that is B. So this is leg B. It should go all the way into next week before it makes the top. So it's very selective, this. So let me just run the numbers as we're about to go out. The Dow's down 33. If at any point the Dow closes above 16,620, I'd have to say, hey, we've got further upside to go, especially if the VIX pulls back sharply. But if the VIX continues to rally and the Dow goes under 16,470, watch out below. I'll be back. Stay tuned.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.